Well, hello. This is Lydia Tate. I am coming back to you with another financial wellness session. And today we'll be speaking about rebuilding credit. Thank you for the few people that contacted me and asked if we could talk a little bit more about credit. So today we will be talking about rebuilding credit. I know that there's so many people who've been affected by the pandemic, and you're trying to just figure out how you're going to survive in 2021. And one of the ways that you want to survive is reinvent yourself financially, and one of the ways to reinvent yourself, obviously, is rebuilding your credit. So don't be ashamed. Don't feel bad if it's your credit's not where it needs to be. We're going to work through this together, and by the end of the next year, 2021, we will be in a better financial position. Our credit will be a lot better than where we are today. If you've missed the previous sessions on credit, please subscribe to this YouTube channel or go to Lydia Tate, and you'll find some of the videos that I've done previously on financial wellness, specifically on credit, because if you see that one, then this one will make even more sense. This one is just diving a little bit deeper on one topic of rebuilding credit. If you're looking to reach out to me, you can find me at coaching@lydiaspeaks.com, coaching@lydiaspeaks.com, or you can go to my website at lydiaspeaks.com and you can see some of the resources that we have out there. And if you're looking for me to come and speak at your church or at your organization about credit or about any other subject that may make a difference to the community, by all means reach out to me. I'll be glad to do that. Of course, right now we're doing it all virtually. And thank you to all the church community and the friends who we've been with over the years, and the churches that I've had to visit with to do financial seminars over the years. I do love you. I hope that you're able to see these videos. Fortunately, this has not been a great year for travel, but hopefully next year we'll be able to see each other again. So going back to my subject, rebuilding credit. So I'll dive right into it, and I'll apologize for my voice again. It seems like whatever this is not going away anytime soon. So I'll apologize for it, but I'm gonna dive right into our subject today. How do we rebuild credit? We've all had things happen in our lives, and sometimes it just creates a dent on our credit, and sometimes we know what to do, and sometimes we don't know what to do. And I can tell you that even if you know what to do, there are a few things that I'll share with you that you'll be like, that I didn't know. So because I am learning, and I've done this, I have taught on credit matters, I've taught on financial issues over the years, and I still learn something every year when I do additional research to prepare for my session. So just stay put. You might pick up something that you haven't picked up before, or you might even share something with me that I didn't know before, because hey, like I always say, I am a lifetime learner. I'm always willing to learn something from you and from anybody else that's sharing information. So what do credit agencies do? What do credit bureaus do? Do we even know what they do, or we just hear about them and we don't know what they do? Of course, we know there are three of them. There's Equifax, TransUnion, and Experian. So if you haven't been familiar with those, Google their websites, Equifax, TransUnion, and Experian, and see what they do. But what they typically do, they collect data from multiple sources to assess your credit worthiness. And basically what they do, whether you tend to pay, they want to know if you're paying on time or not. And they collect all this data, they combine all this data into a credit report. And then they sell it to companies that they do business with, like financial institutions, for instance. So then banks, on the other hand, gather your information, gather your data, and banks and other companies provide your credit and other personal information to these credit agencies for free. So in other words, if you're paying on time, they report it to the credit agency. If you're late, they're reporting that to the credit agency. So they're sending your name, address, social security number, all that data, including when you're paying, whether you're paying on time or not. All that stuff goes to the credit agency for free. And then the credit agency turns around and cleans this up a little bit, gather some more data from other companies, other agencies, like maybe other debt collectors, public records, credit card companies, any other organizations out there that has information on you, on your payment history, or anyone you've done business with. They gather all that information. Government agencies, if there's a bankruptcy out there, all that information is collected, and then that's sent to the credit agency. The credit agency then combine all the data they're getting from all sources, and they create this credit report. So all this, once they have this credit report, then when you go to a financial institution and you're trying to get financing, then that's what the financial institutions pull. They pull from Equifax, Experian, and TransUnion. Sometimes they pull from all the three. Sometimes they pull from just one. And I'll give you a little history about all this, where these credit reports, how they work within the United States, and see what part of the country you fall in, and in which one they're most likely to use in your side of the country. Okay, so with all this said, sometimes there are mistakes, right? There may be possibility of mistakes, identity theft, just issues with the processes, and because of that, there are regulations and policies and that govern or protect us consumers with all this information. So you have to be aware, and one of the reasons why I'm doing this class is, if you're not aware of what your rights are, then you wouldn't know what to do if something is not done correctly on your credit report, or if somebody reports something they shouldn't report. You have to be aware, you have to know what your rights are as far as what needs to be on your credit. So so the Federal Deposit Insurance Company cited errors such as missing loan payments, incorrect social security numbers, reporting individuals with similar names and addresses and all that. So therefore, to combat all that, there are lawmakers and regulators who've continued to update and issue standards recently that would protect consumers, like I said. So meanwhile, legislation has been introduced in Congress to further improve the transparency and the accuracy and the security of reporting agencies. So we are we are protected in more way than one. So we just have to again know what those protections are, and what we need to do when something is not done correctly with any of the three credit bureaus. So what do they really do? What does Equifax do? What does Experian do? What does TransUnion do? What do they do? Again, I said that there are three of them: TransUnion, Equifax, and Experian. So the three major credit reporting agencies are essentially the same. I mean, they do the same thing. They all collect data and they combine with other data and they spill it out there to the financial institutions or whoever you're borrowing money from. But historically, the three were in different regions, right? I did mention that. I'll explain how that worked. So previously, Equifax was more for the South and the East, okay? So the southern part of the United States and the eastern part of the United States. That's where Equifax was more, was used mostly historically. And this is something that is really interesting to me because I didn't even know this data until recently. And then Experian was more in the West, and then TransUnion was more central US. So we had three different credit bureau agencies in the country that were serving different communities. And then at some point, with the legislation changes and all that stuff, they just adopted to have all the three nationally. So you may see that there's still a trend where if you're more on the southern and the eastern part, you may see companies use more of Equifax. If you're doing business maybe in the central part of the country, you may see a lot of TransUnion. And if you're doing business with a company that maybe is headquartered in the West, you may see that organization do more of Experian. I'm curious to know what your findings are with that. I challenge you to look and see if that data is still in place. But according to research and statistics, that's still the case in most situations, even though there are organizations that would put three of them together to make a decision. Like for instance, if you're looking to buy a mortgage, I don't know any mortgage company that will just pull one credit bureau. At some point, they'll pull all the three, and then they'll pick one and make a decision on your lending with one of them. So you want to be sure that you know where all the three of the credit bureaus, how the three of the credit bureaus look for you. So beyond providing lenders and other companies with credit report, the credit reporting agencies also make money by selling individual credit monitoring, identity theft, fraud protection, as well as copies of their own credit report. I mentioned that. So, sometimes you get them free, sometimes you pay for them. If you go online now, you can actually get a free copy of your credit at least once with all the credit agencies. But I would say that, and then sometimes when you go a second time, they want you to pay for it. I wouldn't necessarily pay for my credit report to get a copy of it right now, because there's so much resources out there. Like annual credit report right now with the pandemic, you can actually get a free copy of your credit through the annual credit report every month, and it does not ding your credit. So take advantage of it. Annualcreditreport.com. Go there, pull your credit report. It will not ding your credit as of now. Now, we don't know what's going to happen in 2021. We have a few months before the end of the year. The pandemic is still here. So I'm assuming as long as the pandemic is still here, this is still going to be available to us. But as of today, until the end of the year, you still have the ability to go and pull a free credit report through annualcreditreport.com. But we also have Credit Karma. You also have your financial institutions who have apps. We have almost every financial institution that I know, specifically the larger banks. They give you the ability to view your credit and see all of them. See one of your credit bureaus. They don't always provide all the three, but they'll give you at least an idea of how your credit report looks with TransUnion, Equifax, or Experian, depending on which one they use. So you want to take advantage of anyone who's able to give you free credit. Previously, I mentioned also subscribing to, looking up creditkarma.com, using their app to check your credit and to create alerts so that when somebody pulls your credit, someone has pulled your credit. And I always say, put alerts with all your credit cards too, because somebody might be out there that's trying to take advantage of you. And if you don't have an alert on your credit, then, it affects you negatively. So let's take advantage of resources that are available out there through your credit companies and, of course, through the credit bureau as well. So despite all the similarities that all these three credit bureaus have, sometimes there are some differences that they have. There's like for instance with Experian, there's a blogger that says that explained that scores vary because of the way the agencies source their information, the way they schedule, or the way they calculate information, their scoring systems, so to say. So sometimes one agency may report maybe a bill, maybe a debt that you have at one bank. They may report it on the 1st, another one may report it on the 15th. And the way that they do their scoring based on when you reported and what your balances were at that particular time, that kind of creates that variance in the different scores. And if you like me, who wants to look at all your three credit reports, there are some times when one is higher and another one is slightly lower and another one is like extremely high. And those variances are due to all those, like the reporting time and what the balances are when they're reported. Just different ways, the way that the companies that you're working with, the credit bureaus, the way that they're using the scoring system and what data they're putting in there and when they put it in there, all those variables kind of affect how that is going to look for you in your credit report. And there have been times when they say your credit report can actually change more than once a month because of these different companies reporting at different time. And it also depends on how your balance looks when the report is calculated. So there are different variables there that affect that, and that is the simplest way I can explain the different differences in the scores with the three credit bureaus at any given time. It can get a little complex, but that's just a simpler way of explaining it to you on why we do have three different scores that look different at any given time. So let's get to about your credit score. It is all about you. So let's get to about your credit score. So your credit score is an overall view of your borrowing and payment history over a 7 or 10 year period, with an emphasis of 24 months history. So credit scores range somewhere between 300 and 850. We talked about that before, between 300 and 850. Again, a report is typically 7 to 10 years, and we'll talk about the statute of limitation after 7 or 10 years. All the negative credit should not be appearing in your credit report, and we'll talk about how you can fix that here shortly. but 7 to 10 year of report, and emphasis on the most recent 24 months. Again, your credit score ranges somewhere between 300 being the worst and 850 being excellent. Could be, I've seen it slightly above that, but 850-ish is really, really good, okay? And the higher your score, the better it is, of course. You can improve your credit lifestyle by taking positive actions. And we'll talk about some of those positive actions that you can take to rebuild your credit. This is our focus today. And so somebody might want to know how often how often does the bank report to the credit bureaus? Some banks report 30 days, some banks report 45 days, some banks may report more frequently than that. So there's no magic number, but the average safe number to use for you to use while you making financial decisions and you're working on rebuilding your credit, the average number to use, the safest number to use is 30 days. So let's just go with 30 days here. But I know that, there are some financial institutions or some credit bureaus that say, they tell us it's 45 days, maybe sometimes slightly longer. And sometimes you even get to see that on your credit where maybe you purchase a car and you don't see it on your credit for almost 2 months. Obviously, they didn't do 30 days in that case. But if you wanted to report within 30 days, you can always call the financial institution and talk to them and have them make the corrected reporting so it can show if you needed to report on your credit for whatever reason you needed to be there. So there's that option as well. But sometimes it just does not show up as soon as you want it to show up. So you want to, again, be sure that you're looking at your credit and you know what's going on with your credit at any given time. So how is it used? How do lenders use this data? Lenders use this code to determine your eligibility for loans, lines of credit, credit cards, insurance, so you want to know your credit score, want to know your position because in this country, you will need somebody to lend you money at some point. So you want to be sure that you're working on rebuilding your credit if it's at a place where it does not look good. And it's also good when you go to these lenders with a good credit score, you get better terms, which means you get better rates. You can afford more for your money. You can afford better things for your money. So you just want to be sure that you're working on it, okay? You want to have a good credit score. In the previous videos, we talked about the different ranges, what's considered poor, what's considered average, what's considered excellent. So you just go back to that video and listen to it again if that's an area where you'd like to learn a little bit more. But the good news, however, is that no credit lasts forever. If you're an immigrant, right, and you've been in this country a long time, so you've had the journey of your credit. You come here, you build your credit is high, and then sometimes it's low, and then it's high again, it's low. So that's normal. Even if you're not an immigrant, you're here, you're familiar with the financial system here, and at some point your credit score looked very, very good and very strong, and at some point that changes. It's something happens, life happens. For instance, you lose your job and you cannot pay your car note. Then what happens is going to affect your credit score if that's the case, or your house got into foreclosure, or you get sick and you just can't meet your obligations. Then what happens? I mean, life happens to many of us, and when it does happen, you have to brace yourself. You have to understand that you're not alone, and you have to understand that you have another chance to rebuild. And this here is really helping those who are really looking to rebuild, especially if you've lost a lot during this pandemic. You can rebuild, you can improve. The good news is, if you start today, tomorrow is going to be a better day, and the next day will be better. So you've just got to make a decision to start, okay? You have to take action. And then your credit score may go up and down throughout the month, sometimes depending on your credit balances. We talked about that. But I want you to know that you can actually improve your credit score in 6 months, even less than 6 months, if you take some of the actions that we're going to talk about here. So what influences your credit score? What influences your credit score? Your payment history. That it means, are you paying your bills on time? That's about 35% of your credit history is affected by you paying on time. That's why it's important to pay your bills on time. That's the biggest influence on your credit history. Then we get to the credit utilization ratios, which means that you want to keep your debt at a certain amount. The magic number is to keep your balances lower than 30%. I always challenge, like I said in my previous video, to keep it at 25%, because that gives you a little bit of a 5% room for error, which, that room for error can change anytime. You may have maybe interest that are kicking into your credit card, or you may have annual fees, or anything can happen. Maybe you have an automatic draft that you have not included there in your payment that is coming out, and your balance goes up. So I always say use a 25% as your magic number on what kind of balances you need to maintain on your credit cards when you're deciding what's safe with utilization. So as far as utilization, it's actually 30% of your credit utilization affects your score. So we talked about we talked about payment history, 35% affects your score. 30% of your utilization on your credit affects your score. So you want to pay attention to that as well. Then we have total debt. If you have too much debt, that affects your credit score as well. If you have, your credit mix is also very important. That means you've got, what do you have on credit cards? What do you have on installment loans? That means fixed interest rate loans, like your car loan, your home, maybe a personal loan with a fixed rate, or stuff like that do not have a revolving balances like a credit card, where that it's not a line of credit where you can use and pay off and use again. So you that mix is very important. And I tell you that the revolving lines affect your credit quite a bit, because again, it goes back to the balances where you have the 30% there, the utilization that affects how the banks look at your FICO score, affects how the agencies score you to be able to afford a debt. So you really want to pay attention to that. And then we go to the age of your credit. How old is your credit? How long have you had it? Is it new? Is it 5 years old? Is it 6 years old? How new is that credit report? That plays a big part also in affecting and influencing your credit report. So you don't want to, when you get to a point where now you want to pay off your debt, and we talked about paying debt earlier, and if you choose to close some credit cards, I would not advise you to, because if you do, it affects your credit score. But if you choose to close some accounts, do not close the accounts that you've had the longest, because those really carry weight on your credit report. I have a credit card that I've had for years and years and years and years, and yes, I may keep a zero balance at some point, or use it all and pay it off, but I keep it simply because it's the oldest account that I have on my credit report, and it carries weight. It helps with my credit score. So you want to be sure that you figure out which of the cards you've had the longest, and take care of that card. Make sure you pay down the balances, and perhaps keep that on your credit, keep that card a little bit longer, or whatever loans you have out there. Maybe you've had loans, if you pay them off, you can't use them again. But if it's a revolving line of credit, or if it's a credit card and you've had it for the longest time, you want to try to maintain it if you can, if it makes financial sense for you. And of course, your financial situation just simply depends on what works for you and your family. Like I always say, you want to be sure that you're having conversations with your family, and you're having conversation with yourself. If you're a single person, have a coffee conversation with yourself, or have a conversation with Jesus. Have a financial conversation with your maker. Have a budget conversation with God, and strategize at the coffee table, and come up with a decision that works for you and your family. I did that when I was raising my kids as a single parent. I still do that today as well. But you want to be sure that you sit down in a quiet place with a pen and paper, and you're reviewing your bills, and you're really writing them down, and you're strategizing, and you're revisiting your snowball debt payment strategy, if that's what you're using, or whatever debt payoff strategy you have. You revisit, you review it, you see how far you've gone, you see if you're doing a good job or not, you change some things. I mean, you really have to have the moments with yourself to make sure that what you're doing makes sense. And then hard inquiries. You also want to avoid people pulling your credit left and right, because those inquiries affect your credit as well. And then we talk of public records. Yes, those affect your credit as well. So those are some of the influences, payment history, credit utilization, total debt, the mix of your credit, the age of your credit, inquiries, and public records. Those are influences, things that affect your credit score. Then how long does it take to rebuild your credit? So rebuilding credit doesn't happen overnight. Like I said, it's baby steps. It takes time. You have to start somewhere. If you don't start, you never achieve it, but you have to start somewhere. So it takes time to reestablish it. So pay down your debts, if you will. Like we talked about earlier, pay down your debts as much as you can, so that and then remove any negative information on your credit report. And I'll dive into that a little bit here later. Then you have to recognize you do have a lot of power when it comes to building and rebuilding your credit. You have the power. Nobody is going to do it for you. You have to do it yourself. And you have a lot of power to change that. You just have to understand how. You have to know how to do it. And so you really have to believe in yourself. Believe in yourself that you can do it, and you have to start somewhere. I can guarantee you that no matter how horrible your credit report is, trust me, if you start working on it, by next year, this time you'll be having a totally different conversation about your credit. So you want to be sure that you actually start doing something about it. We talked about the free credit report agencies. Try and pull them up. Equifax will give you a free copy. Experian and TransUnion. And another thing also, if you recently gone to apply for credit and you got declined, all the three agencies will give you free credit report. When you call them and say, I was declined for a loan, can you send me a free copy of my credit report? They will send it. If you've recently gotten a letter in the mail saying, we're sorry, we will not approve you for A, B, C, and D loan or whatever, there's a number there. Call this number. Call them and tell them, look, I got declined for a loan. I need a copy of my credit. They'll send it to you. They'll send it to you, and you can take a look at it, and you can if you don't understand how to read your credit report, find resources, find people like me, find counseling agencies, and let them work with you to help you understand what's going on with your credit and give you a plan that would work to help your credit get better. So here I'm going to run down a few ways to rebuild your credit. I've given you a good history and some good resources there. So how do you rebuild your credit, Lydia? How do you rebuild your credit? 1, clear up errors in your credit report. We talked about the legislation and the laws and what you can do if you know what the Fair Credit Reporting Agency says about your credit. You know what your rights are. Then you will know that you can go fix some of the things on your credit or dispute some things on your credit that are not right. So clear up errors on your credit report. Studies have shown that 21% of people who reviewed their credit report found errors. 21%. So if I have an audience of 100 people today, 21 of you would have errors on your credit. And that could be me too. Except I look at mine quite often, probably more often than I need to. But that could be you too. So you want to pay attention to your credit report and make sure that there are no errors. Again, use your bank apps, or use Credit Karma, or use some of the other credit reporting agencies out there, and that will help you understand your credit. If you're at lunch break, pull it up, see what's in your credit report. Play with some of the stimulators that they have there, and it will show you what you need to do to improve. And if you act on it, I guarantee you your credit report will get better. We talked about paying down balances. Again, it's 30% utilization. If you have, let me give you a practical example. You have a $1,000 limit on your credit card, and you've used $1,000. That's a no-no. That's just not good for your credit score. But if you've used $300 or $250 out of the $1,000, then that's safe. That does not influence your credit negative. As a matter of fact, that's a positive influence on your credit. And so, like I said, 30% of your utilization affects your FICO score. So you want to be sure that you're staying within 30%. And I gave that example of $1,000 so I can simplify it. But think about if you have a $10,000 credit card. If you owe more than $3,000, it's affecting your credit negatively. So I gave an example previously about somebody who has a $10,000 credit card, another with $1,000 credit card limit, and one owes what, $250 on the $1,000, and the other one owes $4,000 on the $10,000. The one that owes it $4,000, the $10,000 limit, is going to be affected negatively. Even though, yes, they obviously had stronger credit to qualify for 10,000, but just because they're keeping more than 30%, and Lydia's book, 25% of the debt on their credit card, it does affect their score, your credit score substantially. So you want to be sure that you understand that your utilization is good. All right. So we talk about clearing errors. We talk about paying down your balances because your 30% utilization has to be in order. And then the next one is resolving collection accounts. I tell you, if you have collection accounts, payment history is very important. Of course, we say 35% of payment history affects your FICO score. So collection accounts, you can talk to the collection agencies, you can call them and you can settle them. You can negotiate with them to take those debts off your credit report. I'll say it again. If you pay them in full, some of those collection agencies will agree to take the report off your credit. And every person's situation is different if you have collections on your report. So I think that the best way to handle this is talk to an advisor, a coach, a financial coach, or somebody who knows what they're doing, because there are some situations where I would give you a totally different counsel on resolving collections. But for the sake of this video, negotiate with your institution, your collection agencies, and consider having them take that off your credit so that it can affect your credit positively. There are several that will do that if you work gently with them, because they don't have to do it. You just have to have a conversation with them and see if they will be willing to do that for you. It's just use your negotiation skills and see if they'll be willing to do that for you. And then another way of rebuilding is opening a secured credit card. There's several financial institutions out here that you pay a certain amount, maybe $99, they give you a $300 limit, and you want to try and use that with the concept of the 30% utilization, where you're not spending more than 30% of your credit card limit, you're staying within that 30 or 25% number, and that will help you rebuild your credit. Another one also, of course, is maybe talking to a family member who trust you enough to allow you to be an authorized user on their credit card. That helps also. I always say, if you're helping a family member who's trying to rebuild their credit, I don't think it's a good idea to issue a card to them if you're going to add them on your account as an authorized user. Add them to your account as an authorized user, but do not issue them a card, because if they still have some behavior issues or they're still making bad decisions on their finances, it may not be a smart idea to have them issue your credit card or a second credit card on your account on the balance on your money that you're paying on, because then they can use the card if they have it in their individual names, and you would have to be responsible for that. So you want to be cautious about that. And then also, we talked about paying your bills on time, working on your past due accounts. We talked about credit utilization. We also consider paying off your credit cards, but don't close them out. If you can afford to pay them off, we talked about debt consolidation previously. Consider that also. Talk to your financial institution to see if they would consolidate your debt, maybe at a better rate, and then pay off all these creditors so that you could have a clean slate. In some situations, the credit is so bad and someone has been through so much, they would consider doing a Chapter 7, which sweeps away everything. It just gives them a completely new beginning with nothing reported on their credit report. But then it would say that they filed Chapter 7 bankruptcy, which stays on their credit for 10 years. But even with that, you could still rebuild and could start all over, and you can purchase a home as soon as 2 years. So there are different ways over there of helping yourself and rebuilding credit. I wouldn't promote bankruptcy per se. I would say consider all the other options that we've talked about getting out of debt, And if you're just looking to rebuild your credit and you have the income to support yourself to maybe afford to get yourself out of debt, then, obviously some of these strategies that we're sharing are pretty good and they're helpful. And okay, so then consider maybe having a family member even co-sign for you for a new debt that you're responsible for, and they'll just be a co-signer, and that will help you rebuild your credit as well. Or maybe open a joint account with them, or again, I said become an authorized user on a credit card, more so than anything else, but only if their limit is at that 30% utilization. If they owe more than 30 or 50%, then in effect, it's not really doing you any good to be an authorized user on their card. If they have a zero balance, hey, that's even better. So you want to talk to friends or family and you trust and ask them if it's something that they'll be willing to do for you. And that's also a good strategy if you have a family member who's trying to build credit. A lot of these millennials are coming out of college or even high school. When my kids graduated from high school, I took them to my bank. We opened an account, for a checking account for them, and I added them to my credit cards, all of them. At some point in the journey, I added them to my credit card to help them build their credit. And in a few months, they were able to get a second credit card so they can have two trades to have a credit history, which we know is very, very important in this country. And then once they established themselves, I took them off my credit card. Then none of them is on my credit card right now. So they have their own credit cards. They check their credit score. They all have, two of them have 700 credit scores and they're in their 20s. One of them maybe a high 680s. She just bought a vehicle recently. So, that may have hit her score a little bit. But they all pay attention to what I'm sharing here with you, and they're strategic. I remember my son recently came to me and he was excited about the things that he did that we talked about, and his score went from, at some point it was 630 and it went up to 700, and he was so excited about it. One of my youngest son actually. So these things do work, and you can implement them day by day. It may seem like a hassle in the beginning, but I can guarantee you that at some point they do work. So let me get back to how long it takes to rebuild credit. So now your credit is what it is, and you're like, when is it going to get better, Lydia? What am I going to have to do, and how soon will I see some improvements? So I just share with you some things. If you have a Chapter 7 bankruptcy, because we're talking about rebuilding, I do not know what's on your credit report, but I'll give you general information. Chapter 7 bankruptcy, if you have that, and it's this is where all your debt is discharged, that stays on your credit for 10 years. If you have a Chapter 13 bankruptcy, that is like a restructuring of your debt or renegotiation of your debt. That one stays on your credit for 7 years. If it's still on your credit after 7 years, or Chapter 7 is still on your credit after 10 years, then it's time to fix the error. We talked about disputing things and fixing errors. These are things that you need to know so that you can work on it. You can let the credit bureau know, it's been 10 years. Why is this thing still showing on my credit? Or it's been 7 years. Why is it still showing on my credit? So those things you can dispute and fix. If you have a judgment also, or paid tax lien, unpaid ones remain on your credit for 10 years, but just if it's paid, if it's a lien on your credit report, a lien that's showing on your credit report, that one should be removed after 7 years by law. By law, that one should come out after 7 years. Any kind of judgment, like civil court judgments, they say you had a vehicle repossessed or a credit card, they took you to court for a credit card 7 years ago, and it's still showing you on your credit. It's time to fix that. That should not be on your credit report. After 7 years, it needs to be gone. So you need to do a dispute or whatever credit bureau that you're looking at, and advise them that, look, it's been 7 years. This is not supposed to show on my credit, and the credit agencies and the creditors are obligated to fix those things. They have to correct it because it's the law. It's not because you said it, but it's the law. If it's something that's showing on your credit report that should not be there, they have to fix it. And if you have something that you're disputing with the credit agency and the creditor or the bank does not respond in 30 days, then by law, they have to drop that off your credit. So I'll just give you a little secret. This is the best time to look at your credit, to dispute things that you need to dispute, um, and just see who's going to respond and who's not going to respond. I mean, we hope that everybody responds, but if they don't, then they cannot hold you liable for something they did not respond to. So you also want to kind of take action right now during this pandemics. Late payments, stay on your credit for 7 years. Had inquiries on your credit report, 2 years. Let me see what else. Missed payment, all those stay on your credit for 7 years. So that's kind of how that would look for you if you wanted to know how long it would take you to rebuild. So those things stay there, but you can still get the secured credit card. You can still pay down on your debt. You can still negotiate with your creditors to settle your debt, and you start rebuilding slowly but surely. And as things drop off, some other things are beginning to look positive, and your credit score improves. And then, get help with your debt. So we talked about debt relief programs previously. We've talked about debt consolidation previously. There are some nonprofit organizations out there that would do debt management plan for you. You want to look at those. There's some federal agencies that do that. There's some nonprofit organizations that do that. But I'll leave that up to you to do your own investigation and find out one that works for you, if you're considering that, and see if they can do that for you. There are companies that also help you with your credit report. There may be one or two that I recommend. If you would like for me to suggest that to you, I would give you a link to use to work with one of the agencies that would help you work on your credit report. And it's all online. You register with them, and they work with a group of attorneys, and they help you with it. And I've sent a lot of people to them. So I'd give you the information that you choose to do business with them, if that's something that you'd be interested in. All right, and again, if you're looking at that, then just reach out to me at coaching@lydiaspeaks.com, and I'll give you that information. So now let's take action, right? The first thing you need to do, pull your credit, look at it and see all the negative items on it, see what your credit score is, pull your credit from Credit Karma or annualcreditreport.com, or any of or your Experian or Equifax or TransUnion or your bank's apps, if they're offering that as an option. And then once you get that, you get a list of all your credit scores or the factors that are impacting your credit score. And if you're trying to improve your credit score, you should consider tackling these factors one by one. If you're using an app, they'll have some stimulators there that you can use. And I guarantee you that if you follow those strategies, that your credit score would improve. So fix the errors, pay off the small debts if you have some that you can pay off. If you want to perhaps adopt the debt snowball strategy to pay off debt, consider that. See if there's any kind of identity theft, if maybe your information is not reported correctly, or somebody else's information is reporting on your credit report. That happens a lot. Identity theft is big business in this country, apparently. So you want to make sure that the information that's reported on your credit report is accurate and belongs to you. All right? And make sure that, that because all those factors would affect your credit score. And then consider the simple steps of removing the mistakes off of your credit report. If it's too old, they need to wipe it off your credit report. If there's any kind of scam on it, they need to take that off too. So have them fix those errors. If anything isn't correct, you can dispute it directly through the credit bureaus. You can do as simple as writing them a letter saying, hey, this credit account number blah 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 that was opened from this time, and this is a credit limit does not belong to me, or it's past due. Or you can go online on their website. All of them have options to dispute negative credit online, or you can use a credit agency that would help you dispute this negative credit on your report. And like I said earlier, there are some creditors that will be willing to remove negative debt from your credit. Okay, so we call that goodwill correction. So if you have, let's say you have a medical bill for $200 and they reported it in your credit report, you can call the agency or the collection agency. You say, look, I'm going to pay you $200. And can you please remove this off my credit report if I pay in full? A lot of them will agree, especially now during pandemic, a lot of them will agree to work with you if you pay them in full. So if you have some money sitting somewhere that you're not using and you need to work on your credit report, and I'm not saying touch your emergency funds money, do not touch that to pay collections. It's not a smart financial move. But if you have debts that you need to settle, consider talking to these companies and see if they would settle some of those debts for you, and that they would correct what's on your credit report. And then negotiate, pay less than what you owe. Pay less and just tell your story and tell them, look, I can't pay this. A lot of these debts that's been on your credit for a long time, they've written that off. They've already gotten some sort of money from it somewhere. I mean, so they'll be quick to settle the debt, because all they want is to be paid, and to close that account. So have decent conversation with your lenders and see if they would settle the debt, or your collection agencies. And like I said, make sure that they remove any kind of identification theft information on identity theft that may appear on your credit report. I mentioned earlier that you can actually get one free annual credit report a year. Now you can get one free every month, pretty much. So you want to be sure that you're taking advantage of that. And I would say, if you can look at your credit every month, it really would be a good thing. Just like you balance your checking account every month. I don't know if you do it every day or every week but it's just as good as keeping up with the balances on your account, because it also carries a large weight when you have to make a purchase. Just like when you're looking to buy a house, they want to see your bank statement. They want to see your credit report too. The same way you keep with your checking account or your savings account is the same way you should keep up with your credit report. So I want to stop here. There's so much information to discuss on this subject of credit. I'll see if I can do another one on fixing credit or disputing a credit report. But for now, if you need for us to talk a little bit more about this, or you have something that you really, really want to talk to me about that would help you, I'll be glad to spend a little time with you and just show you what you need to do based on your personal profile, so that you can be empowered to, at some point, be a homeowner, or be able to refinance your home, or be able to send your kids to school, or just be able to get the job that you're looking for that you now cannot get because of your credit score. If you want to reach out to me, lydiaspeaks.com, lydiah speaks.com. I'm going to put that information down here on this video. And you can also reach me directly by emailing me at coaching, COACHING, at lydiaspeaks.com. And check us out. Look at the website. I have a book out there that you're welcome to, that helps you with dealing with your mental, emotional health right now, and spiritual health especially. And I close this by reminding you that you can do all things through Christ who strengthens you. You can do this. You can get out of debt, and you can clean your credit, and you can be an empowered, financially strong, and financially well human being. And I hope that you take this to heart and you pray before you start working on your credit. Have a good evening. Happy Saturday. Thank you.